Welcome back. You're watching Power Breakfast on CNBC TV 18. Well, let's take a look at what the Asian markets are doing because the close from US has been on a bit of negative side. It was just mildly in the red. The Asian markets, however, Shanghai down about 0.3% given that trade rhetoric that we have got that we might not get a definitive deal at the G20 summit. Nikkei, however, holding up just slightly in the green, just toying around that flat line. Kospi as well. So across Asia, the moves are very, very limited. We are seeing all these indices really trading around the flat line. Let's see what the SGX Nifty is doing because initially it was suggesting a downtick of around 16 to 20 points. Let's see whether that move has got exaggerated as far as SGX Nifty is concerned. So that is showing a downtick of around 11 points starting at the 11,970 mark. Let's see whether we start there or closer to those levels. But here is some opinion from Chetan Iyer on the Indian market and expectation from the government.
If you expect that there is a deal on June 29th, then this sweet spot scenario comes into play because the Fed has already indicated that it's ready. Unlike 2018 where the Fed was saying it's far away from neutral and it's going to get into restrictive, it's right now saying that it will be easing. So you need that confidence that global economy is not going into recession. So if we continue into the current scenario, then it's great for India, but if we head into a recession, then unfortunately not. I do think that here in India, people underappreciate how much closely Indian business cycle is linked to the global cycle. So yeah, I mean, I don't think there was going to be, the way I describe this scenario is that there is no absolute winner in this trade war. I definitely think that there was some possibility of overstatement. So, you know, during my days when I was researching on India, the way I was looking at the data more closely was looking at the broad corporate revenue, aggregate corporate revenue, EBITDA growth and net profit growth. Yes, you get an estimate of nominal activity and not real, but that still gives you a better feel of what's going on in the economy rather than looking at the GDP statistics, which have got all kinds of issues, and the most important being the deflator. While we can look at the overall GDP growth, what matters for the corporate sector is what happens to the global business cycle. So I think that is one challenge for India. We think we'll have another one of those quarters where we are below 6%, but after that we edge towards 7% over the next 3 to 4 quarters because we do think that the government will work towards fixing that financial system. For example, there is a possibility that we get a greater recap of public sector banks. We think there is a possibility that there will be some solution in the budget to help out the real estate sector and potentially the non-banking financial system as well. I think if they take up something which is supporting the real estate sector and the corporate sector in form of tax cuts or tax incentives, I think the markets will accept that expansion of fiscal deficit.
Well, back home on the Lord Street, it was a rather volatile trading session which saw the indices end in the green. Now the Sensex closed just a little under the 40,000 odd mark, while the Nifty held on to the 11,900 mark on the closing basis. The broader markets, where they fared slightly better yesterday, the Nifty Bank and the mid-caps ended high with a gain of close to around 0.5% approximately. Sonia joins us early this morning to run us through all the market cues that are stacked up for us. Hey Sonia, good morning.
Hi Nigel, good morning. You know, the headline index is still being protected, but when you look at what's happening beneath the surface, you do get a bit of a sinking feeling because the market breadth was quite weak all through the day yesterday. A lot of mid-caps came under pressure, especially the debt-ridden companies, and even the index, it was all well through the course of the day, but we lost quite a bit of ground by the end of trade. So the Nifty continues to face resistance at that record high of 12,000 to 12,100. In fact, the flows have also dried up pretty much. So it seems like the foreign investors have now become fence sitters, at least until they get more clarity on what the budget could throw up, whether there's anything on LTCG, etc. If you look at it, FIs merely bought about 96 crores in the cash market yesterday. Domestic institutions were sellers, so they sold about 150 odd crores. And like I said, the bigger malaise is what's happening in the broader markets. So yesterday, you name it, you know, stocks like Jet Airways, ADAG stocks, Eros International, India Bulls were all under pressure because of promoter and debt-related issues. Now, the global cues don't really matter to us too much because we've been moving on our own domestic issues. However, the Dow snapped its 6-day winning streak. It is the US-China trade tensions that continue to put a lid on the global market gains. As Chetan Iyer yesterday was telling us, if these trade tensions continue, then FY20 could result in a global recession as well. I think that's what has resulted in lower demand even for crude. So because of crude demand faltering, crude prices have fallen as well. So in fact, yesterday Brent crude was down 1.5% at $61.4 a barrel, which is of course good for our markets, but the overarching theme is the slowdown in demand. So the traders that we spoke to yesterday indicated that the Nifty will now remain in a range between 11,800 on the downside to 12,100 on the upside. The 200-day moving average on the Nifty is 11,085, so that would be a level to watch out for. And today, you will get the April IIP and the May CPI numbers. So, the inflation and growth numbers will come through. That will be something to watch as well.
Okay, Sonia, it's a whole host of macro as well as macro cues to watch out for. But in terms of micros, there's not much stock-specific news today, is it?
Yes, there isn't. A sector that you track closely, Anisha, will be in focus, the power sector. The government has announced a 100-day plan to re-energize the power sector. The Power Sector Council has been proposed to address issues between the centre and the state. And the Power Ministry plans to set up a pan-India distributor as well. So a lot of these power companies will definitely be in focus. Apart from that, ADAG group stocks continue to get thrashed day after day, and more bad news coming through. Reliance Capital, PwC, has resigned as auditor of the company. So, that entire pack could once again be in focus. Yes Bank, yesterday in late trade, Yes Bank came off from the day's highs after Moody's came out with a warning of a downgrade. Apart from that, the founders are demanding a board seat. The compensation, issues continue, and one of their nomination panel chairperson also has quit. So a lot of issues coming through for Yes Bank, and that stock could once again be on our radar. Apart from that, Reliance Industries could be in focus. Reports indicating that Reliance and Brookfield are now inching closer to that tower deal. Remember, RelGeo's 170,000 towers are valued at 36,000 crores, which is almost a $5 billion deal that could get stitched through. So that's perhaps a stock to keep on your radar as well.
Okay, all right, Sonia.